Hi everyone, and welcome to the Octa live trading session. My name is Ambrose Ebuka, and in live trading sessions like this, I show you how to analyze the market and news before trading. We'll also look at a couple things like the methods of opening and closing a trading order. But before I go into further details of today's session, you can go ahead and let me know in the chat your name and where you're watching me from. So you can go ahead and let me know in the chat your name and where you're watching me from. And while you do that, I'll just go over the promo code that you can use to get 100% bonus the deposit you make with Octa. The promo code is Ambrose E100. You can take advantage of this promo code following these 5 steps. You open your Octa trading app, or you can log into your personal account using the Octa website. And you go to your profile. You can find in the promo section, or you can apply the promo code in the promo code section in the menu, or you can enter this promo code and press activate. Now, if you're using your mobile phone to make a deposit, just while you're making your deposit, there's a section for promo code. You can just type in the promo code there, Ambrose E100, while you're making a deposit, and you can enjoy this bonus. It's 100% bonus on your deposit, and I believe that you will take advantage of that. Okay, I'm seeing some people in the chat. 1 second. Okay. Obed Funky from Suriname. I don't know if I pronounced that correctly. Fidelis from Port Harcourt. Michael Okole from Lagos. You're right, saying EURUSD. So back to the live session. In this session, I'm going to analyze a couple of pairs, and mostly major pairs like pound, dollar, euro, dollar, gold as well. And if you have pairs that you want me to analyze, you can go ahead and let me know in the chat. I would also analyze those pairs for you guys. Okay. Once again, welcome to the live trading session with Octa. And before I go over, analyzing the charts and giving you guys my directional bias on these different pairs, I would like to talk to you about work that I use to place trades. I'm going to show you guys the framework that I use to place trades. I think I'll just type it down. Yeah. So this framework helps you to eliminate emotion trading. Usually when a lot of beginner traders come into the market, they just have this excitement of trading, and they just, make rash decisions because of that excitement. But this framework is like a step that you should follow. If you want to do is to check the news. And these are steps that I use. Would also use it in this session so that you guys can see how it works and why it's very important for your trading activities. Okay, so you want to check the news. That's the first thing you want to do, and we're going to do that actually. And then you want to understand market structure, right? I think I'm going to put this one on this side so you guys can see clearly. Okay, so you want to understand market structure, and by understanding market structure, you want to look at identifying patterns on the candlestick chart. This is a candlestick chart that we're going to be using for this analysis. So you want to be able to identify patterns, identify trends, the overall trend of the market, identify if the market is ranging, if it's consolidating, identify supply and demand zones. We're going to do that. The essence of understanding market structure is to identify the overall direction of the market, to understand what the market is doing at any given time. So after understanding market structure, you want to identify key levels. And you can do that using trend lines. So just for clarity, by key levels, I'm not talking about psychological levels. No, key levels are areas of supply and demand. Or you can find support and resistance levels using trend lines as well. You can also use that find supply and demand levels using the moving average, using indicators like Fibonacci. So this is not psych levels, okay? Just for clarity. So identify your key levels using trend lines, moving average. You can use the 200 period moving average and 50 period moving average, which I use. And you can also use the Fibonacci indicator and support and resistance zones to identify key levels. We're going to use all this, so it's important that you look for an entry point, right? Remember, you're following a framework that guides you on executing your trades. So you want to identify the best possible price that you can execute this trade. And what you need is candlestick momentum. That's the number one thing you need. Now you can add indicator. Okay, so for example, in a market that is giving you reversal patterns, you want to look for reversal candlesticks. If it's reversing to the upside, you have to look for bullish momentum candlestick like the engulfing or the hammer candlestick, or you just look out for pin bars. So you want to be able to look out for these candlesticks to identify your entry points, because the candlesticks are going to give you the momentum and the information you need to understand the price that you want to execute the trade. 1 second. Okay. And for every trade that you enter, for every trade that you open, you also need an exit point, right? So you need to identify your exit point, and you can identify your exit point using swing highs and swing lows, candlestick highs and lows. And you can also use the stop loss and take profit automatic order to close your trades. And it works when you're not online. So if you're not going to be on your charts every day, the stop loss and take profit order will automatically close your positions at your own preferred price. And finally, you want to apply proper risk management on your trades. And by proper risk management, we're looking at risk to reward ratio. We're looking at still using stop loss and take profit orders. And it's important that you also use a conservative lot size, a lot size that fits into your trading plan, fits into your risk tolerance as well. These are some of the things that you would look at that falls under risk management. Now, if you look at these steps, we're having about 6 steps. Check the news, understand market structure, identify key levels, identify entries and exits, and apply proper risk management. These are the steps you want to take before you exit. It builds confidence. Immediately you click either buy or sell, you just have a second thought, what if this trade goes against me? Or that's because most times you don't follow a framework, you don't analyze your risk management plan, make rash decisions and get scared and all that. You're going to eliminate all of that if you have this framework in place. So I'm seeing a lot of people saying EURUSD and US30. We're going to analyze all these pairs. Okay, so let's follow the framework. The first thing on the framework is to check the news. Let me know in the chat if you guys can. Guys, go ahead and let me know in the chat if you can hear me. Okay, you said you can hear me now. I just need to confirm that before we proceed. All right, cool. Okay, guys. So the first thing we want to do is to check the news, which I'm doing right now. I'm just going to go over the Octa FX economic calendar, the Octa economic calendar rather. The name has changed from Octa FX to Octa. All right, so for the Octa economic calendar, I like to focus more on high impact events. Now, if you're a beginner trader, right? Someone is saying the connection is too bad. I think it's fixed now. Sorry guys, it's raining here, so I think it's good now. Okay, so the Octa economic calendar has different economic reports with different impacts, right? So we have the low, the medium, and the high. Now, if you're looking at the low impact economic reports, just like the name goes, it's going to have a low or bring about low volatility to the market. If you're a beginner, you need that just for knowledge. Medium impact as well, you still need it, just for knowledge as well. But I like to focus more on the high impact events. So I'm just going to use the filter, take out the medium impact news, and just set it only to high impact events. Again, I need to confirm if you guys can hear me clearly. Okay, I believe you guys can hear me now. So we've had quite a number of high impact events today. We've had reports from the Chinese yuan, or reports that would affect the Chinese yuan. We've had reports that would affect the euro, Canadian dollar, US dollar. I'll just take some of the most important ones and just briefly explain what they mean, because we're going to see how these economic events would impact the currencies when we go over the charts. Okay, so pay attention, guys. So first, we've had the manufacturing, non-manufacturing, and manufacturing PMI, which is obviously going to have an impact on the Chinese yuan. The manufacturing PMI and non-manufacturing PMI are released on the last day of the month, and it's a monthly data, usually released on the last day of the month. And the non-manufacturing managers or purchasing managers index is an indicator that measures the business activity of the non-manufacturing sector. So we're looking at sectors like real estate, healthcare, education, finance, and other non-manufacturing activities. And then we have the manufacturing purchasing managers index, which is also an economic indicator that gives us insight. Or, well, when I mean us, I'm talking about traders, all of us, right? So it provides insights into the health of the manufacturing sector in a country. Now, if you want to understand these economic events and what they mean, Octa has provided a definition. If you click on them, you can just read through and understand what the actual data or the impact the actual data is going to have on the domestic currency. Just like you have here, a reading below 50 signals that activity among goods producers is generally declining, which is seen as bearish for the Chinese yuan. Okay, so you can just take advantage of these definitions and the economic calendar in general to understand each of these reports. The retail sales is a measure of changes in the sales of the German sector, just like you can see here. We had reports on the consumer price index, core index of consumer prices, and also harmonized index of consumer prices. Now, the consumer price index measures the changes or the change in price of goods and services purchased by consumers. Again, you can always read through to understand, right? You can always read through and see what impact the actual data is going to have on the domestic currency of the countries. We've had GDP, analyzed GDP for Canadian dollar as well. If I switch over to the medium impact, you're going to see that we also had GDP data for the US dollar. PMI rather, PMI data for the US dollar. And if you look at these figures, you'd see that the actual data was way higher than the previous. The previous was 44, the actual was 55. Now, if you go down, you'd see where it says a result above 50 is bullish for the US dollar, whereas a result below 50 is seen as bearish. Now, usually when I talk about economic calendars and how you can look at what's going on fundamentally and all right, I think you guys can hear me. Let me know in the chat if you guys can hear me now. Sorry about the technical issue, guys. It's raining. But yeah, let me know if you guys can hear me now. Okay, so again, if you get a bit conflicted about the reports, that's where technical analysis comes in. First, you need to understand the impact of the reports. Okay, so if you get like a high reading on a low impact news, which is supposed to be bullish for the domestic currency, and you get a low reading on a high impact news, the market is going to react more to the high impact. That's just the basic understanding. But then you're not going to trade fundamental reports in isolation. So you're going to combine them with technical analysis, key levels. The fundamentals give you a long-term direction of the market. The technicals would help with areas where you should execute the trade. So I'm going to go over my charts right now, since we've done the first step, which is to check the news. And I believe you guys, or you can let me know in the chat if you understand the economic reports, how to read economic reports using the Octa economic calendar. Let me know in the chat. So the second thing you want to do is to understand market structure. Okay, and by doing that, there is a step to it, right? There's a process. So the first thing you want to do is to go to the higher time frames. We're looking at the monthly time frame. So you want to go to the higher time frames. It doesn't, regardless of your, I think I'll just put this to the side. Regardless of your level of trading experience or your trading style, if you're a day trader, scalper, swing trader, the monthly time frame is very important, right? So let me show you why it's very important. If I zoom into, this is the dollar index. This chart is the dollar index chart, and we are on the monthly time frame on the dollar index. Okay, now if you look at, which means every candlestick here opened and closed within 1 month. So if you look at the dollar index, you will see that for the whole of November, it's been on a bearish trend. The candlestick is pretty bearish, and this is a bearish momentum candlestick. If you can see, it's not a doji candlestick, or it's showing you good bearish momentum. I'm going to zoom in closer so you guys can see properly. Okay, I think this is good. Okay, so for the whole of November, which is obviously going to close bearish across other currency pairs or currencies, is to sell the dollar, right? So if I go to the lower time frame, let's say the daily time frame, you'll see that we've been on a downtrend, just like the monthly, right? So you've seen that we've looked at the monthly, it's bearish, very bearish on the monthly, with the last candlestick we were looking at. Then we've gone to the weekly time frame. You've seen, or the daily time frame rather, you've seen that the daily time frame has created multiple lower highs and lower lows headed downwards, right? Just going to zoom in a little bit. Now we've understood that for this month, dollar has been trending downwards on the daily, on the weekly, and obviously on the monthly, just like we identified, right? So what is that going to do for you? Remember, you can't trade the dollar index. It's a benchmark, that it's used to assess the overall strength or weakness of the dollar in the Forex market. So you can't just trade dollar itself or the dollar index, right? So what you do is you use your buyers on the dollar index based on your analysis to trade other pairs or other currencies that are paired with it. We're talking about major currencies like pound dollar, Euro dollar, Aussie dollar, Kiwi dollar, and gold as well. So looking at the dollar index on the daily time frame, you can see that I've already mapped out some key levels here, which is the support and resistance, supply and demand zones. So first, we've checked the news, we've understood market structure, the trend, which is bearish, right? You guys can see it. It's bearish on the daily, bearish on the weekly. Now, if you're a swing trader, you're trading, you like to keep trades for months, then you wouldn't really be looking at daily or 4-hour time frames, right? But because I'm a day trader, I'm not going to go all the way back to what happened 10 months ago. I'm focusing on recent price action. Okay, and what I'm seeing here is bearish for the past, after this breakout was in November, the first week of November, headed downwards, right? And if I show you guys pound dollar, which is GBPUSD, you'd see that GBPUSD has been heading upwards. Okay, which shows you that the dollar is weaker, just like it is here. It's also showing you that it's weaker across major currency pairs. Same thing goes for Euro USD, Aussie dollar. I don't have Kiwi dollar here right now. I'll show you guys that. But the point I'm trying to make is, you look at what's going on with the dollar. Just like right now, we're seeing that the dollar made a breakout of this key support level that we can trace all the way back to August. Broke out, tried to make a retest here, but broke back into the previous support and is now trading above it. Okay, so if the dollar made a retest here and couldn't break above, then we'll be seeing much more downside. I think all the way to, I'd extend it here, downside movement on the dollar, but we didn't get a retest now. And remember, guys, this is a daily candlestick. You guys saw the PMI reports that I showed you guys, Purchasing Managers Index report that came out today, which was bullish for the dollar. And you can see this spike in reaction to that. So we didn't get a retest. Instead, we got a break back into and above this support level. Now, this doesn't mean that the dollar is bullish, right? This is just a reaction to the news. The overall trend is pretty much bearish on the dollar until we get a break above the 200 period moving average and also this key level that is identified here. Then I can just say, okay, this is a lower or a higher low that has been created here, and then we are bracing up for a retest at 107.2. Okay, so the dollar is still pretty much bearish. I'm just going to go to the 4-hour time frame and give you guys more of an in-depth understanding of the movement of the dollar index. Okay, so like I said, retest. The retest was not successful. The news came out, the dollar reacted, broke above, but it doesn't mean we're bullish because we have this key level here. We have this one, we have the 200 period moving average. If you're familiar with the moving average strategy, you would know that if the market is trending or trading below the moving average, it's a downtrend. If it's trading above, it's an uptrend. And this moving average strategy works perfectly, or works well, I would say works well on the higher time frame. Okay, so if you're going to the 1 minute time frame, it's just going to be noisy for you on the 1 minute time frame. So we're looking at using that strategy on higher time frames, which, you know, we can see here a lot of times. You can see that the market was trading above the 200 moving average, the 200 period moving average rather, here, uptrend all the way from the break above the retest, multiple bounces since August, was an uptrend all the way up to November, where we had the break below the retest, and now the market is trading below the 200 period moving average. So like I said, still bearish on the dollar. There are some confirmations I want to see, which is break of structure and break out of the 200 period moving average. Okay, but as long as we keep trading below this key level, keep trading below the 200 period moving average, then the dollar is still bearish. Okay, So we're going to use that bias to look at GBPUSD, just like someone said in the chat, and EURUSD. We're also going to look at gold, but you guys can go ahead and let me know in the chat if you understand the dollar index analysis. Remember, if you're going to be trading major currency pairs like EURUSD, pound dollar, Kiwi dollar, Aussie dollar, it's important, and you know, dollar yen as well. It's important that you understand what's going on with the dollar index. Okay. All right, let's look at pound dollar. As usual, we want to go to the higher time frames. Right? Let's start from the monthly. Again, I don't think I said that earlier, but if you guys have questions, you can always go ahead and type your questions in the chat. We're going to have a section for questions. I'll take all your questions and answer all your questions. So just so you don't forget, you can go ahead and type it in the chat. So we're looking at the monthly time frame. Just going to zoom in a little bit on the pound dollar. So as you can see, for the whole of November, pound dollar has been bullish. You can see it in the candlestick. Again, I'm only focusing on the recent price action because I'm a day trader, right? If you're a swing trader, then you would need all this information. If you like to hold trades for months, this is the monthly time frame. We're bearish on the monthly time frame, as you can see here. This is 2014. But I don't really need all this information because I don't hold trades for months. I'm a day trader, okay? So I'll zoom into the monthly. We're pretty much bullish. Also, you can use the monthly time frame to identify some key levels, because when market respects key levels, the monthly time frame key levels, it's usually stronger. Like, it's usually stronger than 15 minutes or 4-hour key levels. Its support on a monthly time frame is going to hold stronger, you know, and if it breaks, then you know that it's going down compared to 15 minutes support and resistance levels. So that's just a quick tip for you guys. Yeah, going to the daily time frame. Just going to zoom out on this one. All right, so pound dollar is making some recoveries, just like as we've seen with the dollar index, because, you know, dollar has been weak, so we expect the pound to gain some strength against the dollar. But here's what I'm seeing as well. So I've identified some key levels just according to the framework, but here's also what I'm seeing, right? I can connect a trend line and this can serve as my resistance trend line, okay? Because what happened here is the market created this high, came up to create another high, and this high was created after breaking multiple key levels. As you guys can see, we mapped this support, mapped this resistance, broke above it, another resistance broken above, retested this resistance to form support, another resistance here broken above and retested. So the market made multiple breakouts to get to this point. And if you can look closely, you'd see the indecision candlestick in the middle. That's the doji candlestick. And usually the doji candlestick represents or appears when the market is trying to make a reversal, right? I think that the dollar or the pound dollar is going to trend or trade below this trend line for a while. Now, if we get to break above it, then I'll be looking for buy opportunities, because this trend line also aligns with a resistance from this point. I'm going to draw that and show you guys. What am I doing? Okay. I think I'll just extend the entire zone. All right. So I believe you guys understand why so again, just a recap on pound dollar. I expect the pound dollar, just because we have this reaction to this key level and this trend line, I expect to see some short-term bearish move, probably trade all the way down to, I'll take this off, Also take this off so you guys can see clearly. I'll extend this, right? I think I'll just change the tool for that one. So I expect the pound dollar to just tap into this zone before it continues to the top side or continues to make a retest at these key levels. Also, we have the RSI giving us overbought signals, and we'll see the market just retrace back into 60. I think this is about 63.7. So we're seeing the market reacting to this key level, double alignment. We have the key level, we have the trend line, we have the reaction from RSI data over bot levels as well. So again, I expect the pound dollar to just trade below this trend line. But if we get a break above it, then we're pushing up on the pound dollar to these levels. Okay, so another quick tip on analysis or technical analysis. The market tends to move like a magnet. Now, here's what I mean by that. If the market wants to move in an uptrend, it's not just going to go like this, right? You're using historical price data to identify what the market would do in the future. And the market is not just going to move from here all the way to the top to make a retest. What the market can do is, if it's trying to make a reversal to the top side, impulsive move, correctional move, creating higher highs and higher lows. Okay, especially on the higher time frames. It's only on the lower time frames, like the 5-minute time frame, that you can see huge spikes. But obviously, you wouldn't be looking for overall market direction on the lower time frames, right? Remember, you want to go to the higher time frames to understand overall market direction. So, as long as the pound dollar is trading below this trend line and this key level, I'll be looking for sell opportunities. I'm also going to wait for this candlestick to close bearish. If it closes bearish and the next one gives me bearish momentum, then I'll be looking to sell the pound dollar. Also, I think we have NFP data. Let's check. Let's quickly check that. Okay, Canadian unemployment rate tomorrow. We also have the chairman of the Federal Reserve speaking tomorrow as well. High impact events. So we're going to see how the pound dollar reacts. But if you keep trading below this trend line and this key level, then I'm just looking for sell opportunities. So if you close bearish, this is already a bearish momentum candlestick. We're seeing the rejection on the doji, and again, doji appears at a reversal. We're seeing bearish momentum. The bears have taken over. I just need that bearish momentum to continue, and I'll just trade pound dollar all the way to this point, looking at about 139 pips. And if we break below it, then I just know that I'm looking for more sell opportunities. Okay, so that's my bias on the pound dollar, and I believe you guys understood that. I'm just going to look at gold, and I'll go over the chart and see what comments you guys have for me. All right, gold is at an important area at the moment, right? This is why it's important. We've been here before a couple of times. Just going to zoom out. Monthly candlestick on gold is bullish. I can even trace that resistance from daily all the way back to August, September 2020, right? Which is why it's a very important resistance. And we're seeing gold test this resistance level. Now, I'm just going to do a quick recap on what I said. The support and resistance levels on the monthly time frames are strong as compared to the 15 minutes or the 4 hours. You can see that whenever gold gets to this resistance, right, it doesn't just pull back and try again, just like a 15 minutes resistance would do. Probably pull back, try again. If it doesn't break, it goes down and the trend changes. You can see that this resistance is holding, and when the market reacts, it reacts very well. 2,000 pips reaction, 4,000 pips reaction, 3,000 pips reaction. We're not talking about 100 pips, 200 pips. So you guys can see that already. Okay, so you can see that the key levels on the monthly time frames hold the strongest. Now, with this retest you are seeing, if gold successfully breaks above, which I expect, then we're flying on gold. If gold can break above this resistance level, then we're flying, right? When I mean break above, don't get me wrong, this is not a breakout. As you can see, this candlestick just spiked above it, and then we had pullbacks, which is why you should be careful when trading breakouts in an asset. You want to see a follow-up. You want the candlestick to close above that breakout and another momentum candlestick that tells you this market is going to continue to move to the top side. On the monthly, that's what you want to see. On the daily time frame or the 4-hour time frame, I'll be more comfortable to wait for a retest. But on the monthly, if you wait for a retest, you'll be waiting for like 1-2 more months. Okay, so the monthly time frame, you just want to see the breakout and that continuous momentum, right? Then you go to the monthly time frame and wait for the market to pull back a little bit, and you look for buy opportunities. So again, guys, gold is at a significant level right now. We're seeing this resistance that we've traced from the monthly. If I go to the daily time frame, you won't be able to see the previous one. So I think you can just see one resistance that we can cite here. Oh, another one. Okay. If I keep going all the way back, we can connect the previous ones as well. But this is why it's very important. And that's why the market is always reacting to these levels. So is this a good time to buy gold? I don't think so. I think that we should wait for a breakout. Successful breakout, guys. Not this. This is a fake out. A successful breakout to the top, which I'm expecting. Guys, I believe gold is going to push to the top side. We can get a nice pullback and another retest. But yeah, until we see that, then I can go long on gold. Otherwise, gold is reacting to this level. Not a good time to buy. We could get pullbacks into this zone. Just going to increase that so you guys can see. You could get pullbacks into this zone before another retest and a potential breakout, or the market could just reverse again to the downside. So we're going to have to be patient on gold and see what the market does. Probably tomorrow we're going to get a result, either a breakout or a continuous reversal. All right, guys, I'm going to look at the chart right now and take your questions. So if you have any questions for me, you can go ahead and ask right now. Okay. EURUSD. Please analyze EURUSD 1 hour time frame. Can you analyze the EURUSD chart? Okay, let's briefly look at EURUSD. And if you want to trade the EURUSD chart, or if you trade the EURUSD chart, you should pay attention. Okay, it's almost the same as the the pound dollar, if you can see. But anyway, I'm going to connect the trend line. Just connect it from here, because I can already see the rejection, right? And if you're familiar with the head and shoulder pattern, I believe that's what we're about to see on the euro dollar. Okay, but we can't be so sure. So one thing about patterns is that you have to trade the pattern only when it has formed. You don't anticipate patterns to form. If you see a double bottom, you don't say at the second bottom that, oh, this is going to push to the top side. That could just be a the market trying to break below the lower low. Okay, so what you want to do for chart patterns is you want the pattern to form completely, and you know what you're looking for. You're looking for a breakout. When the chart pattern forms, you're trading the breakouts, right? If you're patient enough, you can trade the breakout and retest, just for extra comfortability and confidence. But very important, you wait for the candlestick to form completely. What do I mean? I'll be confident to trade euro dollar if we break below this neckline. Okay, but I'm just giving you guys like something to anticipate on euro dollar. This is just what I'm seeing at the moment. The left shoulder, the head, the right shoulder, which is also a reaction to this previous high that was created. We're seeing the market also react to overbought levels as well. It's pushing to the downside. Very bullish momentum candlesticks on, or candlestick being formed on the euro dollar. I'm going to go to the lower time frame so we can get extra detail on what's going on with euro dollar at the moment. All right, guys, we're seeing the change in direction. We were on a downtrend, trading below the 200 period moving average on the 4-hour time frame, and now we've changed to the trade above it, creating higher highs and higher lows as well. And now the market has reacted to this trend line. Okay, tried to break above but couldn't. From what I'm seeing on the euro dollar, I would say the market is just reacting to this trend line. We can't say for sure if it's going to break out because we didn't see any follow up here. We're just seeing a reaction. So if you want to trade the euro dollar, or if you want to buy the euro dollar, because the overall trend is still bullish, right? We're still headed to the top. Market is just dancing around and dancing above this support level that I just mapped out, 1.05. But if you get a nice break above this trend line, then we're going to see the market try to make it retest at 1.1225. Okay, but that's what you want to wait for, a breakout. I'll also identify another resistance, potential resistance that we're looking out for on the pound dollar, which is also why we're getting this reaction as well. Double alignment. We have the key level here, the trend line key level as well. The market is reacting to that. For the short term, I believe that we're going to get, let me just zoom in for you guys to see. Map this one out. Previous support that was created here. I think I'll just use the I'll use this tool to map it out for you guys. All right, so we're just seeing the market react to this trend line. Obviously headed to make a retest here, and this retest could also be an alignment of the 200 period moving average. We could get something like this, get a bounce. If the market doesn't break below the bounce, we could get another potential retest at this trend line or this key level as well. And if we successfully break above this key level, then we're looking for buy opportunities on euro dollar. But currently the market is reacting to this trend line. It's headed downwards to make a retest at this zone, which I believe it will in the coming, I think tomorrow, yeah, because of the high impact news that we're going to have. So I expect that to bring about volatility in the euro dollar market. It's already headed downwards, headed to this point. So if you want to trade the euro dollar, I would say be patient, see how the market reacts to this key level, and if you get a bounce, then you want to look for buy opportunities. Okay, this is a very strong key level, and this is on the 4-hour time frame. Okay, so let's see how the market reacts, and we can, trade accordingly. So let me know in the chat if you understand the euro dollar analysis. XAUUSD, I've analyzed that. And guys, remember, you can always watch this video. You can always come back to the Octa YouTube channel to watch this video and, improve your knowledge and refresh your memory about my framework and my analysis. I'm a beginner trader on the Octa trading platform. Welcome. Congratulations on being a trader. I have question. Can't see your question. Based on what I've learned so far, economic calendars have many versions. They typically describe the event, its scheduled date and time, and the previous expected and actual values. Well, that's a brief way to explain it. Yes, economic calendar can give you an idea of, just like the Octa economic calendar, reports that will be coming in months, in weeks, in days, and previous reports that have already happened. And the reason for fundamental analysis, I mean, there are a lot of reasons, right? But I would say the overall reason is to understand what's going on economically in different countries, because that's going to give you the long-term perspective. If the unemployment rate is high, the inflation is high, then the economy is not going to do well, right? And if the economy doesn't do well, what happens to the currency? It depreciates in value. And what do? You sell the currency. Pretty simple. Okay, let's see other questions that we may have. Guys, we still have some time. We have about 5 minutes. So ask me questions. Maybe not just about this analysis, but about your trading activity, right? And while you're typing your questions, if you have questions, I'm just going to go ahead and just ask you guys maybe 1 or 2 questions, right? So let me know in the chat some of the things that are included in the framework. Now, when we started analyzing, I showed you guys 6 steps. I just gave you guys a hint, but yeah, 6 steps of things that you should do, or things that should be included. 6 steps that should be included in your trading framework that is going to eliminate emotion trading, rash decisions, over trading, all that. Tell me what. Maybe you can give me 1 of the steps. You can give me 2, as much as you know, but let me know these steps that should be included in your framework. Let me know in the chat. Mm. So Obed is saying check the news, risk management. That's correct. I'll just give you guys some more time to give me answers. And again, if you have questions, you can always ask your questions. Desi is saying EURUSD in parallel channel in 1 hour time frame. So I believe you're talking about connecting this and this, but I'm not really going to extend this because we've had a reaction already. Okay, so if this market was trading around here, then yes, you can extend it, but we've had a reaction, so I can't just skip this reaction and change this to the downside. We've seen the market bounce already, but couldn't sustain the bounce, and boom, it broke below, which is why I told you guys that euro dollar is attempting to make a retest at these zones, this level, because we've had a breakout from this support trend line that is being sustained. We're seeing the momentum candlestick. I'm going to zoom in closely so you guys can see what I mean by momentum candlestick, right? So we're headed down to make a retest at this level. Okay, but I expect some pullbacks, some consolidations. I don't think it's just going to go all the way to the downside. It's headed here, but yeah, I think we're going to see some pullbacks and some consolidations before we drop to the downside. I'm talking about something like this and another break to the downside. Be Smart is saying understanding market structure. That's right. Be Smart is also saying key levels. Correct. Okay. For anybody that doesn't understand or know what I mean by framework, I think we had it here. Where did we have the framework? Can't really see it. Let's check the daily time frame. Okay, I'll just go over the steps, Check the news, understand market structure, identify key levels, identify your entry points and your exit points, and apply proper risk management. These are steps that should be included in your framework before executing a trade. That way, you've killed any emotional stress that can come from that trade if it goes against you. If you're putting a 2% risk on that trade or 1% risk, then you've already identified your trade, your risk on the trade. So if the market trades against you, you're good because you've already identified your trade, your risk on the trade. But if you just go into a trade without identifying your risk and you're just 10 lot size, 100 lot size, when the market starts going against you, you start to feel emotional about it and experience emotional stress and make rash decisions and all that. You don't want to be that kind of a trader. You want to be a trader that has a systematic approach to the Forex market. And I'm not saying having a systematic approach is going to make all your trades 100% profitable. No. But when you have a consistent strategy that can keep you in the market long enough to place more trades and make more profit, then you're on the right track. Okay? It's been an amazing live trading session with everyone. I'll see you guys in the next one. Thank you very much for participating.